Okay, so I really hope the sound is recording on this, because if it's not and I talk to myself for 50 minutes and nothing is recorded, I will likely just delete this page and I will never do this again. But as promised, I'm going to go through the entire portfolio, talk about all the positions basically, and then what I think near term and long term is going to kind of look like, and then what I'm planning to do with my current cash position, which is 3.47% cash from my Tesla proceeds. Rest in peace, Tesla. Yeah, that's basically it. So before I start, this is literally just going to be me talking to myself. I'm going to pretend that I'm not even recording. This is the second take because I started and the rambling was so like inconsistent, and then a giant bug appeared on the wall, so I had to kill it. So I thought I was only 10 minutes in, so I'll restart. I'm going to try and do it in a bit of kind of, what's it called? In some sort of order. So I'm going to talk about first where I'm going to be planning to put the cash, and then I'll talk about the position, how I'm considering what I'm considering doing with positions, and why I planning to do that essentially. Okay, yeah. Hope that makes sense. And also, as you know, as always, this is not financial advice. I have no idea what I'm doing. Financial markets is just slightly calculated gambling. That's literally all it is. You just try and hit your high percentages, and then hopefully you make money, right? Oh my god, it didn't die. Whatever. It's just one of those stupid maple bugs. They can live. Okay, so to start off with, so I sold Tesla. I guess I can talk about. Okay, so first of all, I'm going to talk about some of the recent position moves that I did, and then I'll talk about what I'm going to do with the future cash. So, what comes to mind? I sold TAN and I sold Neurocrine Biosciences. So I sold TAN mainly because TAN is it's called the solar ETF. So it's just an ETF that tracks like a bunch of solar companies, and because we are heading into a period of higher inflation, higher bond yields, or not higher bond yields, lower bond yields, higher bond yields. Yes, sorry. I always get confused because so how bonds work, right? You have a bond and then you have a coupon, which is how much you get paid to hold the bond. I'm going to kill this bug again. Okay, it's dead. Okay, so you have bond yields and you have bonds, right? You say if you buy a bond for $100, it has a 1% yield, as they do. So you get $1 for the 100. So you put $100, you have $100, you buy $100 bond, and you collect $1 a year, and you're guaranteed to get your money back and the $1, right? As bond yields push up, bond yields push up when the price of the bond goes down, right? So I didn't actually know that, like when I first started investing, that like bonds could shift in price, but I guess they can because you own like technically a security. So say if the bond that you owned went from $100 and now it's $50, the yield would still be the same, maybe a 2% yield now, right? Because the bond halved in value, so your yield has gone up technically. So that's what the 10-year yield is. The 10-year yield is based off of government-backed securities, so government bonds, which is considered like risk-free because the US has never defaulted on their debt, right? That's like, as far as like if you like want to say like safety, it's the safest asset to exist technically because you're guaranteed unless, I don't know, like the US blows up, and that's never happened before. So to date, it is the most risk-free asset. So as bond yields go up as a result of bonds coming down, right? As bond yields go up and as inflation ticks higher, the Federal Reserve has to start increasing interest rates. So as interest rates go up, companies that are valued way higher, so companies that have higher valuation, so if we go to ticker terminal quickly, so if we look at my current portfolio, if we sort by EV to EBITDA, oh, that's not how you sort EV to EBITDA. So if we just start here, right? Or if we go start bottom up. So Palantir is trading for 89x EV to EBITDA. And the cheapest one, that's an actual company, would be Micron, which is trading at 4 enterprise value to EBITDA. So in an environment where we expect interest rates to rise, bond yields to rise, et cetera, essentially like an inflation era, kind of like before the 2000s, I think was the period. In that kind of environment, we would expect Palantir to be hit a lot harder than Micron, for example. Like not those specific companies, but just like valuation wise, right? We would expect the companies that are down here to be hit harder than the ones here. So usually what happens is capital rotates from highly valued companies into deep value companies. So obviously like my portfolio is positioned very well for that, right? The majority of them are trading dirt cheap. So like the only two, that's like another thing. I'm debating with myself if I should keep Palantir and Zillow. They are relatively smaller positions. I think it might be like 6% total combined of those two. So it should be fine, but I'm going into it knowing that there is the possibility that they will be hit hard, a lot harder. But in the other sense, like if Palantir is going to just keep growing 30, 35, 40% a year for the next 5-10 years, it doesn't really matter. Like it matters the valuation right now, but they will easily fulfill their valuation. So basically that's like the entire premise of the stock market, right? Is management says this. So management, like Elon says Tesla's going to likely grow 50% every single year for the next 10 years. So if you believe management, you can easily kind of like build out a model on how much the company would be worth right now based on future value, right? So that's called terminal value. So that's why companies that are like, so one example would be like QuantumScape, right? So they were up a lot in February during like the entire bubble phase. Well, everything was up, but so companies that like essentially have nothing, so like Nikola, they have absolutely nothing, no factory, no car, this is literally nothing, but hopes and dreams get hit a lot harder when interest rates starts going up, because then it starts to matter where you put your money, right? Kind of. I don't know if that entirely makes sense or if that's entirely true, but the general premise is that. So I actually don't know how I got to this topic. What was I even talking about? So I need to drink some water. Okay. So, oh yeah, what I did with my positions before. So I sold TAN because they hold a lot of, TAN holds a lot of companies that are valued very highly right now because like all environmental plays have very rich valuations right now. And I think they're going to be hit quite hard once we start rolling over. So I got rid of TAN and I got rid of TAN. I got rid of Neurocrine because we were topping out of this big triangle. I don't know if the chart works here. Where's my, oh, this is not right. This is not the right one. Where's Neurocrine? NBIX. There's no way I don't have a chart. Where is it? Oh, it's right here. I'm blind. Oh my god. Oh. Oh yeah, okay. So I'm recording on my iPad because it just wouldn't work on my laptop. It wouldn't work on my desktop. So I don't know. Gotta do what you gotta do, I guess. So we're coming out of this big triangle on Neurocrine. So we kind of topped. Can I draw? Draw. Brush. So we were coming out of this giant triangle here. So, and we're hitting the upward bounds. We're waiting for, essentially, we're waiting for like a 10% correction, right? This is where I'm hoping that it corrects to, hopefully. So in the meantime, I rotated the capital in Neurocrine into Bristol Myers, which is another pharmaceutical company. They're very, very cheap. So it's like almost like a light cash position, right? So I'm keeping the money there. I've always wanted to take position in Bristol Myers, but I just never really had the capital. But I rotated it for now, hoping we break down in this triangle before we start going up. So at that point, once we hit around 90, what is this? I think 95-ish, I will likely either rotate half the money back into Neurocrine or all of it. Here I have Neurocrine divided by Bristol Myers. How do I get this to pull up? Yeah, okay. So if we can, Jesus Christ. If we can see, this is essentially, if this line is like going up here, I guess you can't see me. I think I can do a pointer. Laser pointer. Annotate. No. Whatever. I'm just gonna draw on it. But like, so here, if this line's going up, it essentially means Neurocrine is outperforming Bristol Myers. And like right now, this line right here is when I swap them over and we're starting to go down. So yay for short-term trading. Hopefully we see hopefully we see Bristol Myers outperform Neurocrine in the near term. And then once Neurocrine is done its mini correction, I'm going to rotate it back. Because I was only up like 10%-ish on Neurocrine. I didn't really want to sit through and lose another 10%, but I don't know, call me greedy, I guess. So I sold Neurocrine because of that. We'll see how it works out. And then I also sold Tesla, 3 years, slowly selling out. It's been a long ride with Tesla, but also obviously same thing. Tesla's trading at extremely high multiples. 800 billion for, I don't know, it's kind of weird because you go from like Tesla's so good, Tesla's so cheap, and now it's like Tesla's actually it's kind of overvalued, but a lot is priced in. It's literally it's like close to being priced for perfection. So I decided, the wallet matters more than the sentimentals. So I cut Tesla. Tesla's gone. Yeah, that's most of the recent trades. And then, okay, so going forward, what I'm planning to do with the 3.47%, I'm looking at either taking a position in a miner, so especially, what's it called? Iron ore, because as everyone knows, the whole situation with the Evergrande thing in China, the real estate developer, there's another bug in here. How are these maple bugs actually getting in here? Okay, so we know what happened in China with the real estate developer, defaulting. As a result, iron ore prices have been plummeting, which has been really hurting all these mining companies. So I'm considering taking a position in one of those. So Rio, Vale, or Ferexpo, that's another one. But Ferexpo is only listed on the London Stock Exchange, but they also have an OTC listing in the States, but it essentially has no volume. So if I like did wanted to take a position for Expo, I would have to do it through my IBKR account, but which is like currently full of positions because my cash is in my Quest trade. So I would literally I'd have to sell some positions in my IBKR account, buy those back in my Quest trade, and then use the cash in the IBKR account to buy for Expo, which is kind of a hassle, but yeah. I need more water. If this bug gets any closer, I gotta kill it again. So Rio and Vale are both very attractive as well. Rio is paying out. Where is Rio? Don't have it. Rio Tinto. And Vale. New York Stock Exchange. So Vale has a 7.7% dividend yield. Very undervalued. Frexpo has a 12% dividend yield. Very undervalued. And where did it go? Rio has a 9.7% dividend yield. And all of them are like essentially equally undervalued. So that's a very bombed out sector. In a perfect world, I just buy all three, but I don't know. Don't have enough money for that. Need to concentrate a little bit, right? To gain alpha. Another sector that's very interesting is cannabis. So I own, okay, I gotta kill this bug 1 second. Another sector is cannabis. The entire cannabis sector has been correcting like very heavily. So I owned Planet 13 before. I think my cost basis was $2, I think. PLNHF. Chart. No. Gotta click here. So I owned, Jesus. It's messing up my chart. So I bought Planet 13 around $2. Oh, shout out to my boy Jeremy, back when he didn't sell out. But bought Planet 13 when it was back around $2, and I think I sold it around here. What the? Around here, around $7. So that was, I think, 250%. And off of, so if we look off of this high, it's down quite a bit. Yeah. Right? Down 52% off its high, which is quite significant. And because of, like, we're trading at the same price as October, or like September 2020. So it's been 1 year. We're still paying the same thing. They're still growing very quickly. So like corrections either happen like this, right? Corrections can either happen like this, right? Where we just straight up crash, or corrections can happen just sideways, right? Where price doesn't move for a very long time. We're just kind of trending sideways, and then but meanwhile, the actual company, the fundamentals, they're growing, they're getting better. So the valuations are getting better. So there's two ways that we're correcting, right? So Planet 13 I wouldn't call a 50% correction, a 50% decrease going sideways, obviously, but has been an entire year. We're 50% lower than some point this year, right? So when I sold it, it was looking quite overvalued, and now it's starting to get back in the area where it's quite attractive. So I think what I might do is I might go half into one of the miners, half into cannabis, because I don't really have any exposure in either right now. Right? If we go look at here. Yeah, I don't really have any exposure in either sector right now because had Planet 13, and then so I was also looking at High Tide. I was looking at some of the other cannabis plays, but there's just like the problem I have is there's just so many of them, right? There's so many of these small cannabis companies that are listed for like 100, 200 million, like between 100 million and $1 billion market cap. There's just like so many of them. And like, how do you like differentiate yourself as a brand? So like one route would be to go like True Leaf, which is just a big producer, right? They're just like essentially like a wholesale producer. That'd be one route. But you would definitely get less, you would definitely underperform compared to like some of these small ones. But then you're like essentially just like kind of like picking lottery tickets, right? Because it's like, what makes you, like, how do you know this tiny company that you picked is gonna win out or is gonna continue growing, etc., when there's like 100 other companies that are exactly the same, right? I don't know. I don't know how to answer that question. I don't have time to read through 100 reports, right, of these different companies. Planet 13 is one of the biggest. They're in Las Vegas. It's like a kind of like a known brand. First of all, in the investing space, and also they're just like kind of famous. It's kind of like, I don't know, like Costco, but for weed. So that's like essentially what I'm trying to say is like I don't really see what moat these smaller cannabis companies would have, basically, because like all they do is just a store and then they just sell it, right? Like I don't think if you were to go and buy some, you just go to the closest store. You don't. There's no real like brand loyalty, right? It's kind of is one of my biggest concerns. But yeah, that's what I'm basically looking at. What else? As far as crypto, obviously, crypto is blowing up. I might, depending on when like, whatever it's called, Coinbase decides to like approve my account to have higher limits so I can buy more than $300 at a time, I might take a bigger position in Basic Attention Token and Solana because I only have $300 in each right now. Oh. Yeah. But yeah, that's kind of annoying. So I'm quite interested in expanding my rune position just because like the longer I hold this token, the more interesting the project is. I don't know if I've talked about it before, but essentially Rune does cross-chain exchanges right now. So like technically, so right now if you have Bitcoin, there's no way for you to transfer it natively to another token. So you can't go Bitcoin to Ethereum, right? You have to go Bitcoin, you have to sell it for like some sort of stable coin, so like USDT, whatever, and then you buy Ethereum. So Rune is trying to address that market where they're creating like an on-chain platform, which is like a bridge that links all of these blockchains together, essentially, and allows them to communicate, and you can natively swap tokens, which is, I don't know, I think that's worth a few percentages, right? Other than that, I don't think I have much more to talk about. I mean, it's only 3% capital. I'm also thinking about, or I have been trying to reduce the number of positions in my portfolio. So some candidates, I might cut. So I'm not planning to do any of this, but it's just ideas. I don't know about an NDM. I mean, maybe I'm just saying that because I'm down 40% and I kind of aped into it when I shouldn't have, but lesson learned, I guess. An NDM, also kind of Southwest Airlines. I'm essentially flat on the position, but because airliners are so reliant on fuel, I don't know how I feel about owning LVS and a bunch of oil companies at the same time, since I'm expecting oil prices to keep rising up to, right? I'm expecting oil to break $100 per barrel, and that will definitely impact all of the airliners' margins. So can they get back to their, like, essentially, can they fill up their planes and their flights and whatever enough to still preserve or increase their margins, even if oil is starting to go up? And I don't know. I'm starting to doubt that. Actually, the more I talk about it, the more concerned it makes me. But so that is something on the watch list. I'm concerned, a little bit concerned about Zillow and Palantir because of the rising rates. But since they're not that much, right? 3%. Zillow is 4%, 7% of the portfolio is in that. So it's not that big of a concern. So also something I'm looking at. And I'm also looking at all of these options. I don't know if they're going to make it. Some of them probably aren't going to make it, and that's okay. The Dropbox one is probably going to expire worthless. This one's probably going to expire worthless. The Fiserv one is kind of cutting it close because I bought a December strike instead of a January. So this one really needs to get moving. Or, because like, if I think it's going to expire worthless by the date, there's no point in me keeping it for a second longer, right? Because like I can still get like however much money is left, even if I'm down 70%, right? Because it's like, I mean, a dollar is a dollar. So, yeah, pretty much it. Okay, I guess onto the portfolio review thing. I'm just gonna do this quickly because my throat is kind of starting to hurt, and it's really hot in this room. Obviously, biggest position. I guess I've never shown any of these other columns because they also like have dollar values on them, and I just don't really want to show that. But I figured out a way to block them off. So I have my spreadsheet here in the middle, all my positions. I didn't fill these out yet because I don't really know how to. I wasn't sure how I wanted to sort that out. But so I have my duplicates. So like, for example, Discovery, I have stock and options. So it's just combined percentage. This is what I do every week just to update this thing because it's not all dynamic. I would like to try and make it dynamic. This is just some of the rules that I've set for myself. Whether I actually follow them all the time is questionable. 5% cash, I typically never hold cash unless I feel like I have a reason to. 5 to 10% leaps. I'm only at, so if we see options here, I'm only at 2.9% of my portfolio is options right now, which I'm a little bit scared of options right now because I went very heavy. Essentially, I got kind of greedy, being an animal. Everyone, sometimes the euphoria gets to you, and I swapped a large majority of my portfolio. I think maybe 20% of my portfolio, like in February, March, that period. So that was a really bad idea, because like options are just like so complicated, right? Because like with stocks, all you have to be right is like, will the stock go up? Yes, that's all you have to do. So that's literally it. With options, it needs to hit a certain price amount by a certain date. But even if it does hit a certain price by a certain date, if the time that you bought it, implicit volatility was too high, you're still going to lose money at the date, because there's just like so many different like factors with options, right? So the options is kind of like, I don't know. I'd say like options like definitely like gambling, but it'd be like, it's more akin to gambling than just owning. positions. And it's definitely a lot more risky because it's just like you just keep introducing more and more unknown factors, essentially. Yeah. Here, crypto is 27% of my portfolio. I don't really pay attention to the target things. I don't know when I put those, but I'm comfortable with that, 27%. Total BTC exposure. So BTC exposure is calculated as spot Bitcoin, and I just counted CleanSpark as BTC because technically, like, most of their revenue now is just mining Bitcoin. So 70% of my portfolio is just Bitcoin. So I guess 10% of my portfolio is other crypto related things. I have the USD Canadian exchange rate. I have this, just a summary of all the industries. So heaviest in crypto, next is software, like hardware, media. So like that would be Discovery, hotels and entertainment, oil and gas, semiconductors, holding company. Oh yeah, also, this is also kind of concerning. eToro, so FinTech Acquisition Corp, which is supposed to merge with eToro, which is a gigantic broker in Europe. I'm not sure if this merger is going to go through. So this is a SPAC. I don't know if you guys know how a SPAC works, but a SPAC is a subscription. So it's like a $10 subscription. You pay the $10 subscription price. So technically, like, this is a like cash position, right? Because its current price is $10. It technically cannot go under $10 because even if the SPAC doesn't go through, you just get your $10 back. So the most I can lose is 3%. Yeah, the most, no. 3%. Wait. I think the most I can lose is like 30 more basis points. So I'm down 11%, like whatever. But this is basically like cash. Bristol Myers is basically like cash. And then DM is basically like cash, which is the only reason why I haven't sold it. Because management is just not doing anything. I don't know what they're doing in their office, but they got 1.5 billion and they're not acquiring any companies. So that's the only reason I haven't sold it. Okay, so I guess portfolio review time. Bitcoin, I'm sure everyone knows what Bitcoin is. I think eventually Bitcoin will surpass gold as the ultimate store value in our 21st century. I don't think gold will ever disappear, but I think they will coexist as what is it called? Like twin pairs. So if we just based off of that, the market cap of gold is 10 trillion. Bitcoin's at 1 trillion right now. So if Bitcoin gets on par with gold, that's a 10x from here. Bitcoin also has like the Lightning Network built on top of it. So that's what like El Salvador is using. If you want to learn more about that, I don't think I'm qualified to talk about that. Although like I know how it works, kind of. But yeah, I know how it works. But if you're interested in that, you can look it up. Just like look up, Bitcoin Lightning Network. It's essentially a slightly less secure way of moving transactions quicker. So if you believe that Bitcoin takes over gold and then Bitcoin also takes over as like a currency, as like a pseudo kind of alternative currency to be used, well then 10 trillion would be a lowball estimate for total market cap. That's essentially, I don't know. I kind of like, the only thing that worries me a little bit is like, like a store value is like, it like worries me a little bit, but on the other hand, it doesn't, since anything that's valuable, like a value is like relative, right? Things only have value if the collective bunch believes it has value. So like, why is gold valuable? Gold is like not even a very useful commodity. Like iron ore, steel, oil, those are all more valuable than gold, right? Gold is literally just shiny. It does nothing else. But it has value because people say it has value and it's worth $2,000 per ounce, right? Same thing with cash. Why is a piece of paper valuable? Because everyone believes it's valuable. That's like, yeah. So basically everything is a pyramid scheme, is what I'm trying to say. So people who say Bitcoin is a pyramid scheme, technically you're not wrong. But on the other hand, everything else is also a pyramid scheme by that definition, right? So yeah, that's my, yeah, basically. Next biggest position, Discovery. Discovery, yeah, I just noticed the top, out of my top 5 biggest positions, the top 4 are down the most. So that's not. Discovery, we're waiting for the merger between Discovery and HBO. They are slowing down their advertising right now because, well, if they're going to merge platforms, why would they expand? Why would they spend money to improve their platform when they're just going to merge and have like one whole platform, right? Doesn't make much sense. So the merger is supposed to go through sometime through next spring 2022. So we're basically waiting for that. Once they merge, basically cheap. Yeah. All for every position I own, reasoning, you know, if you want to DM me, why do you own this? It's cheap. That's why. Yeah, Discovery's merging with HBO. The combined company, some concerns people have is that they're gonna have a lot of debt, but because they're going to a direct-to-consumer business, they're gonna have plenty of cash flow to service the debt. And yeah, it is fine. It's very cheap, especially once they're merged. The only risks would be if the merger doesn't go through for some reason, which is quite unlikely. Unfortunately, I can't say the same for FTCV, but Discovery, the merger will very likely go through, and we should see some strong performance out of Discovery either next spring, or if we start discounting it ahead of time, sometime by end of year, hopefully. Micron. So this is like a very interesting point, right? So back a couple months ago, because like I also look after my parents' portfolio. So I was like, and like a lot of like my friends or whatever other people were asking, is Micron or AMD a safer investment, right? And like on paper, Micron is by far, right? Because Micron is trading at whatever, four times enterprise value to EBITDA. Like they can literally, with how much cash flow they have coming in, they can literally buy themselves out and go private in like whatever, like 4 years or something. AMD was trading at, I don't know. AMD is always traded at like an absurd valuation, right? So on paper, whenever anyone asks me like, which one's a better investment, which one's safer, right? Micron is safer. But in the past 6 months, AMD, I mean, I sold my AMD calls up 120%. Micron's still down 13%. After I averaged down a few times. So I guess what like my point is, just because things don't always like work out exactly how you like think or want it to work out, right? Because on paper, like there's no disputing that Micron is cheaper than AMD, but it doesn't mean that it'll always stay that way. It doesn't mean that, I guess, the entire, like as investors, how you make money is you have to spot value or you have to spot arbitrages before everyone else, but you also have to make sure that everyone else actually does spot it, right? Because like you could be saying, oh, this ice cream company is super cheap, right? And you could be 100% right. They could be super cheap, right? And you get in before everyone. But if the entire, like if the market as a whole doesn't realize the same thing as you ever, well then it's gonna stay at the same price, even if it's like the cheapest thing in the world, right? I don't know if that makes sense. So like, for example, Tesla was the same price between 2014 and 2018. or 2019. It was essentially range bound for 5 years. Just why I need more water. But yeah, Tesla was range bound for 5 years. So if you wanted to make money, so you could have gone in 2014, right? And you could have been like, Tesla is cheap. And you could have been right. But you would have been wrong for 5 years because it would have done absolutely nothing, right? So yeah, like I don't know. I think that makes sense, right? Like you essentially, how you make money is you spot value before others and you have to get in before everyone else does. But as a caveat, other people have to spot the value eventually, or else you're never going to make money because no one, there will be no buying pressure that comes into the position, basically. Yeah. Okay, back to my, so yeah, Micron, they make mostly DRAM. They're one of the largest memory producers in the world. Currently, there's been some downgrades from, I think, Goldman Sachs and some other, there's been like a couple articles essentially about how they're expecting prices to like decrease of DRAM. That's what the articles are saying. The CFO is saying the opposite. So in this case, we're gonna believe the management team over, these random analysts, and we will live or die by that. Wait, I was gonna say something about that. I cannot remember now. But yeah, whatever. FTCV gonna merge. Merger got pushed back, which is why we kind of saw it collapse down to $10 because people are unsure if the mergers are gonna go through or not. Overall, SPACs are not very loved right now, especially because they kind of blew up at the start of the year, right? Almost every single SPAC shot up. You could literally buy any SPAC, you'd like double your money, 5x your money, and then after February, March, kind of like when the mini bubble popped, all of them have just completely crashed. So interest in SPACs is not very high right now, but as long as the merger goes through, we'll be a-okay. GoPros are very cheap. Mainly biggest concerns. Oh yeah, that was what I was gonna say with Micron. Every company that moves physical products right now is being plagued with supply chain issues. So that's what happened with Corsair, because they came out with a profit warning saying essentially because like if anyone knows or anyone has tried to build a computer recently, there's a gigantic chip shortage, right? There's no GPUs. All the car manufacturers have been hit. So that's why Porsche has been correcting as well. So anything that has to do with moving physical goods or needing physical goods, especially if they're connected to semiconductors, don't expect their earnings to be very good. Yeah. Okay. Yeah. So Micron wasn't selling memory because people can't get GPUs, right? Why would you buy more RAM for your CPU or for your desktop if you can't get a GPU? Why would you buy stuff from Corsair? Why would you buy fans? Why would you buy a case if you have no GPU, right? That's like common sense. But because of like one of the supply chain issues, it's like rippling through and it's affecting all of these companies. So the supply chain issues are likely to be transitory. We'll get through it. Yeah, that's basically it. GoPro, main concerns is the CEO. Some people don't like the CEO because earlier in his days, he like bought a yacht and he started like messing around. But the business has like really turned around recently. So I guess the market still doesn't really believe that they're going to continue doing that. But valuation wise, GoPro is very cheap. Rig is also, if we expect oil to go up, rig will go up. Rig is an offshore producer. They're trying to tighten up like on land production of oil. So that's good for rig because it'll push production into the ocean, which is good for rig because they license out drilling fleets. Overstock does furniture. They also own a bunch of like digital asset platforms. So that is like the main catalyst. The furniture business is performing very well, and all of their like digital exchanges are essentially priced in as $0. So a lot of opportunity there. Las Vegas Sands was hit very hard by China. I didn't take a position for a long time, and I looks like I got in for once near the lows, up 8% already. Nano Dimensions, we don't talk about Nano Dimensions around here. Don't buy Nano Dimensions. I mean, or you can. Nothing is advice here, but yeah, I don't like Nano Dimensions. Hurt me. Zello is moving from just an advertising model into like a vertically integrated, like everything to do with real estate. So they're starting to buy houses, and then so they sell you a house at basically market value, and then they sell you services. So like, oh, would you like to get your roof done, or would you like your kitchen done? And then they would sell the services, and that's where they would make a lot of their money. So they're having like an entirely new business model change. They're expected to grow 50% approximately every year. And all of these numbers, I'm just approximating, obviously. You can go and look at the financial statements on your own, because like, I can't keep this many numbers in my head, but it's approximately right. Porsche owns Volkswagen, and Volkswagen sells 10 times more cars than Tesla does, and they're valued at like 10 times less or something. But yeah, basically cheap. Cash, Coursera just bought it, up 4%. Earnings didn't come out, down 4%. You know how it goes. Coursera makes physical products, mostly like computer components. I got my fans from Coursera. They're very beautiful. They were also very expensive. They sell a lot of. They also have some like, what's it called? Like some software platforms for streamers to use. So it's like hardware and software. We like that. Cheap. Coursera was at a high of 50 when everyone's hyping about it. Now it's 25. Now no one wants it. So that's the best way to make money, right? We don't buy on the highs. We buy when nobody else wants it. And then we sell it to all the people that want it at the very top, right? Because that's all the stock market does. You transfer wealth from the impatient to the patient. Yeah. Play is Dave & Buster's. They own, it's like kind of like Chuck E. Cheese, but like for more adults, or kind of, I don't know what would be example of like the rec room, kind of like that. A lot of locations in the States, opening up, very cheap, should be. It is one of the pure reopening plays, along with LVS and Southwest Airlines. Dropbox, as you know, I cut Dropbox from the biggest position down to like a 3% weighting. Took a lot of profit, rotated into different companies. Still like Dropbox, just business as usual. LVS, yeah, they're one of the biggest airliners in the States. It's like Air Canada kind of in the States. They mainly focus on, what's it called? Like within the country flights, as opposed to like some other airlines. So they fly mostly within the United States. They're one of the best run airlines as well. Obviously my biggest concerns, the fuel thing. And also they were missing a bunch of flights because I think they're forcing like all of their staff to get vaccinated, which is causing a lot of like staffing issues. So that's not good either. Bristol Myers, is another pharmaceutical company. They're very cheap, very low beta, kind of just like an as cash position, like cash that I'm holding while I wait for Neurocrying to correct. What's next? Palantir. Palantir is kind of like a pure play data processing firm. It's very much a monopoly, and it's very, very big moat. A lot of people say like data is the future. The more data you have, like I believe that as well. You know, being a software nerd. Yeah, they're quite expensive right now, valuation wise, but if they keep up the growth, 30% compounded every year, then they will eventually fulfill their valuation and more. Rune, talked about Rune before. CleanSpark, they went from making like microgrids. Now they mainly mine Bitcoin. CleanSpark compared to like all of the other miners is like extremely cheap. It's like trading super duper cheap. So CleanSpark right now is like $15. The last time Bitcoin was around 60,000, I think CleanSpark was around 30. So obviously that's like not a good really comparison indicator, because it could have been, people were obviously willing to pay more for it back then than they are now, but the business is a lot more built out now, and they got more Bitcoin, they got more miners, they're more developed, etc., etc. Some concerns would be it's a relatively smaller company, like 300 million market cap, and they've had some issues with like it's like a shareholder they kept suing CleanSpark, something about like management. So that's like one of the downsides only really about CleanSpark, I guess. Also, I don't know how much like I like cryptocurrency miners, just because like I have some concerns about those, but as of right now it's too cheap to not have a spot. Suncor is one of the biggest oil producers in Canada, just kind of to diversify, because I don't know if I'd be comfortable if I had 7% in rig. Even like 5% is quite a lot. Nokia they do a lot of the physical infrastructure for like telecom. So like for example, my router is like SaskTel partnered up with Nokia. Nokia does a lot of, they build the towers, they do a lot of transmission, etc. A lot of their business is done in Europe, because it's, I didn't know that like before, they're headquartered in Europe, I think. But Nokia is a 5G play mainly, and it's kind of a turnaround company, because Nokia was kind of in the dumpster, and the new CEO is really pulling them out, so that's good. Next, Ethereum. Ethereum is Bitcoin's little brother, but they're entirely different. So Ethereum, Solana, ADA. Is there another one? I guess Binance, technically. Those are all smart chains, so you can like build your apps on those, and then you use Ethereum as gas fees. A lot of the crypto stuff, it's kind of like complicated. If I don't know if you guys want a dedicated like video or whatever on it, I guess I can do that, but it's probably easier just to look it up. Discovery Call. Fiserv is kind of like one of the older like legacy fintech companies, so kind of like, you know, Visa and MasterCard's forgotten younger sister, I guess. They operate like a payment processing system, so kind of like what Square does, but they're way, way, way cheaper than Square valuation wise. Like Square is stupid expensive, but you know, people they're fine with paying money for Square, but no one wants to buy Fiserv. So hopefully they buy some Fiserv, you know, I can not be down 70% on my calls. That would be super, super good. Another CleanSpark call, basic attention token, Solana. Those are just another very, very, very speculative crypto positions. I might increase them a little bit, not sure yet, and then draw box, clean spark. Yep, and that's basically it. I know this was really, hopefully it made a little bit of sense, but probably didn't. Yeah, that's fine. So what I will probably do is I will probably go half plan 13, half one of the minors. I've not decided which one yet. I think I'm gonna look up the comps for all three, and if there's any other ones that come to mind, just do a comparison. Ballet and Rio Tinto are a lot more diversified, while for Expo they're like kind of just iron ore. So that would be one of the concerns of that. But for Expo is a lot like cheaper compared to the other two. So I don't know. I will have to think about it. Yeah, I think that's it. Also, I will try and get the Discord opened. So if anyone wants to come in and ask a question, if they're too shy to ask on Instagram, I'd be happy to help. Yeah, I think that's it. Peace.